Today we're exploring Max Kieser's comments that ruffled some feathers within the Ethereum crypto community. He recently appeared on Kitco News for an interview regarding finance, where he fired plenty of shots at altcoins, essentially any crypto besides Bitcoin. Now, you'll want to stick around to the end because we're going to lay down some basic rules for determining if a particular cryptocurrency is a scam. Once again, we appreciate you tuning into Profit Protection and hope that we can provide you with some useful insights for your own financial interests. So, without further ado, let's dive right in. Now, who is Max Keieser? Max Keieser has been a well-known face in financial media for some time now. He has hosted numerous shows on various networks that covered economics and financial markets. Max has gained popularity over time for speaking out on circumstances he deems unfair within the economic system, as well as promoting alternative financial tools like cryptocurrency. Max hosts the Keiser Report 3 times a week on the RT network. He's been building up an audience there since 2009. A separate interview on Kitco News went live on January 25th of this year that stirred up quite a big commotion online. Among other things, he told the host Michelle that Ethereum and all other cryptocurrencies apart from Bitcoin are essentially scams. The conversation began with a lengthy discussion on the pros and cons of Bitcoin. They spoke of energy consumption, legislation, and more. This video is centered on the divide between Bitcoin and alternative coins, but it's worth noting how strongly he believes in the original cryptocurrency. A standout quote from the interview is, "Bitcoin solves a problem that humans have had for hundreds of thousands of years, and that is a need to exchange value for value over space and time." He dug into the differences between Bitcoin and other traditional forms of money. You have likely heard this reasoning before. Our previous video on Michael Saylor's argument for Bitcoin over property revealed similar insights. Gold and other precious metals are difficult to move across space and time, and the mining process is incredibly inefficient in terms of energy consumption. Regular fiat money, like the American dollar, is subject to inflation from governments printing more. It also appears to be losing value along with other national currencies. Keiser related the development of blockchain technology and Bitcoin to the development of the wheel. The host, Michelle, asked if this metaphor still holds true when it comes to further development. For example, the wooden wheel came first, with the tire coming after. Max argued that in the metaphorical sense, the basic principles of Bitcoin are as important to cryptocurrency as the circle shape is to the wheel. He doubled down on this notion by explaining the major differences between alternative cryptocurrencies and Bitcoin.
So Bitcoin is the definition of digital money or digital gold, and it has established itself now as such after 12 years or so in existence. And there would be no desire to improve upon it because it already does what it says it's going to do perfectly well. There's no shortcomings in what it does. It does exactly what it should be doing, and it does it perfectly well. So there's no need to try to improve it. I mean, the Congress, right now, there's a debate in Congress, and you have Bitcoin, and you have a lot of other coins. And you have Bitcoin, which is proof of work, and a lot of these other coins are essentially what's called proof of stake. Now, a proof of stake coin, which is no different than fiat money. It's just governance by who has the most of it. And that's not an improvement from the current fiat money system. But one of the things that proof of stake coins can do is they can print lots of money for themselves in what's called a pre-mine. So they have a lot of cash to hire lobbyists and to do a lot of marketing. With Bitcoin, there is no pre-mine, there is no center, there is no organization, so there's no lobbying group per se. So it just exists for what it is as it is. And it's being adopted because it solves this fundamental problem as it is.
Essentially, Max argues that decentralization and other fundamentals of Bitcoin are what separates it from the pack. Other alternative cryptocurrencies lack key features that make up the nature of truly decentralized money like Bitcoin. In this Kitco News interview, he reiterated a previous statement of his, saying that every altcoin will eventually trend towards a value of 0. Why does Max Keieser think altcoins are going to lose relevance? His first point had to do with energy consumption. In what he calls the energy race, all cryptocurrencies are competing for energy usage to mine, send, and receive crypto. 66% of all power consumption in the crypto asset space is dedicated to Bitcoin at this time. and he claims that this will only grow larger as Bitcoin gains more traction. According to Keiser, the decentralized finance space, in other words DeFi, is filled with projects that claim to run under the same principles, but fail to match up to Bitcoin's perfection. He pointed the finger towards Ethereum and made some intriguing points. Ethereum, while promoted as decentralized finance, is in fact centralized. All servers are in corporate server farms, which can be turned off at a moment's notice. And transactions can be reversed, which has happened many times. On top of this, he pointed out that there was a huge pre-mine of Ethereum coins equaling roughly 70%. These are held by the development team and other investors involved with the project before it went public. The facts around this pre-mine aren't cut and dry. A portion of the coins was coded directly into developers' wallets, while the majority was given out on what they called a crowd sale. Over 10,000 addresses were involved in this crowd sale, making it appear less of an insider game and more of an early opportunity. Whether this makes Ethereum more or less decentralized is a matter of much debate. Some point out that the unbalanced holdings will allow some early holders to exert too much power over the economy of Ethereum. It's worth noting that about 40% of the pre-mined Ethereum was handed out to roughly 100 people. Others argue that the rate at which Ethereum is currently being mined, the pre-distributed coins will become less and less significant over time. As you can tell, there's always going to be more sides to the story. His main point concerning the perfect nature of Bitcoin is rational and gives us some good food for thought. Max Keieser certainly understands the importance of the principles that Bitcoin is built on. It seems there are benefits to other coins as well in terms of new protocols and networks, but he doesn't see it that way. In Max's opinion, Ethereum and other similar altcoins are essentially pyramid schemes, built for early holders to profit off, convincing others to buy in.
The SEC, Gary Gensler, has yet to come out definitively and say whether or not Ethereum is a security. So we're still waiting for that definitive comment. He may, in fact, and it is a security because it was created with the intention of profiting or making money from the sale of these tokens. That's textbook securities, a security sale. I know because I'm a former broker for many years. I know a security when I see one, and that's a security. And it should be shut down as an unregulated, unregistered security, for one thing.
Keiser is convinced that Bitcoin is the only crypto that isn't a scam in essence. Now, what are the key features of Bitcoin that are not emulated by Ethereum? I'll go through 3 features that are essential, but before I do that, I have to ask you to do me a favor. Hit that like button if you find this information valuable. Okay, so first, compared to other cryptos, Bitcoin is truly decentralized. The term decentralization is not as straightforward as it implies. One can refer to the decentralization of governing power, aka how many people, if any, get to decide on changes to the protocol. One can also refer to decentralization in terms of who controls the most mining or the most coins. On one hand, there's an imbalance when it comes to the geographical distribution of Bitcoin miners, as well as their contractual relationships with corporations. On the other hand, Bitcoin protocol is unchangeable. It has been built to serve specific purposes and cannot be modified. Luckily, the craftsmanship is incredible and it has held up since 2009 with no end in sight. There is no centralized governing body. Secondly, limited supply. Scarcity is a fundamental force that's driven exchanges of all sorts across the globe for as long as we can remember. The law of supply and demand is intuitive and natural. This is why Bitcoin's limited supply is significant. The eventual end to Bitcoin mining doesn't halt the increase of price. If anything, it drives the price higher. Compare this once again to the US fiat currency. 80% of all dollars in existence were printed between January 2020 and October 2021. Inflation is higher than ever. This is a clear case of why scarcity and finite resources are important to retain value. Another contrary example to Bitcoin is Ethereum. While there are currently between 18 and 19 million Bitcoin in circulation, the total supply is capped at 21 million coins. Ethereum has no limit and can be mined continuously, providing a constant influx of new coins. This is not necessarily something that makes or breaks a coin, but the principle of scarcity is timeless, just like you want your money to be. The network effects. Just like the metaphor of the wheel, there are reasons that the majority of people are still flooding into Bitcoin. When the first round wheel was built, you can bet that there were others inspired to attempt to make wheels of other shapes. The fact of the matter was the core principles were already discovered and implemented. It didn't have special rubber tires or steel rims, but it served its purpose perfectly. Likewise, Bitcoin gains the network effect by being the first in the crypto space and building itself on sturdy protocols that are built to stand the test of time. While there are many interesting crypto and blockchain projects current today, Bitcoin remains the dependable leading coin. Other improvements from altcoins will be successful, but the key components are already present in Bitcoin. It's not a stepping stone to something better. So, there's plenty of debate on altcoins and their legitimacy. How can you know for sure for yourself if a cryptocurrency is a scam or a worthy investment object? Here are a few tips for anyone considering picking up a new cryptocurrency that they are unfamiliar with. It's important to take precautions so that you don't end up conned out of your money. Research the development team. The unfortunate fact is that it's incredibly easy to create a cryptocurrency and put it up on an exchange. The crypto market is wildly unregulated, and as such, there are plenty of volatile, untrustworthy coins being pushed each day. If you are considering buying a new altcoin, delve into the background of the main developers on the team. This means learning their credentials, what past projects they have worked on, and if their identities are legitimate. You can fake social media followers, and you can even push phony press releases. Do diligent research on the members behind the projects before buying into their products. Familiarize yourself with the technology and goals. If you feel you can trust the people behind particular cryptos, the next step is understanding their mission and goals. Any legitimate company should release a white paper detailing everything from the technology being used to their objectives and future plans. White papers are created specifically for interested investors who want to know the facts. Are they missing a white paper and don't promote any of the documentation on their operations and plans? Run the other way. Scrutinize your source. If you are researching a new cryptocurrency to invest in, but find yourself questioning how dependable it is, follow your footsteps back to when you first discovered it. Was your source a well-established figure in the finance world, or was it an Instagram influencer? One has the knowledge and experience to understand what they're talking about, the other is being simply used for their influence. A real-world example is the unfortunate scam coin Save the Kids. Several members of FaZe Clan, an esports and influencer group, promoted the new cryptocurrency in the summer of 2021. The organizers and influencers made off with tens of thousands of dollars, and no money was donated to charitable causes. Legitimate crypto projects will not use pure marketing to convince people to buy in. They must be backed by facts and features. If your source is not actually part of the crypto world, there's something suspicious going on. Guys, we're so happy that you tuned in for another video from us here at Profit Protection. Whether you and Max Keieser agree is beside the point. What's important is that you continue to educate yourself and learn from the smartest minds in the digital markets. This channel does not offer financial advice, only an opportunity to grow smarter and craft a better future. If you enjoyed this video, please hit those like and subscribe buttons so we can continue to bring you quality analysis and updates on the latest from the thought leaders in the financial world. See you in the next video.